Hello Maverick traders, this is Imri and welcome to today's currency recap. Okay, so there was actually a fair bit that went on today. GDP readings were stronger than expected and the market closed down on the day today. So why is that? Well, we can only speculate, but I would argue that a big deal of why the market saw the stronger than expected GDP news as negative has to do with the fact that this, this doesn't ease the inflationary pressures that are weighing on risk markets. Equities are definitely not exempt to this. So that's kind of the narrative there that I've been seeing a lot of traders talking about. Whether that is true or not, well, history tells us that stocks and the broader economy, GDP, can go up together, they can fall together. Stocks and interest rates have gone up together, gone down together in the past, they've diverged. So I think historically speaking, there is no strong evidence for an argument to be made that there's a high degree of correlation one way or the other. But markets have, it's funny, on the one hand, markets have very long memories, but in other ways, they're extremely forgetful. And they're focused so much so on the narrative in front of us right now. Well, that's exactly how herding behavior manifests itself, and it's not surprising. It's a key component of how markets actually function. But anyway, moving on to some analysis here. The dollar staged a bit of a recovery today. Crypto's weakened just a few minutes ago as I'm recording this. Actually, crypto's weakened considerably after having a nice pop to start off the day. We're going to talk about that in just a little bit. First off, we have a look here at the S&P 500. So you can see here we've run right into moving average resistance. We've tagged the 50-period moving average and we're now trading lower. What's interesting here, right, the big question in my mind is, do we break that 3,700 handle in the S&P 500, which is where the 20-period moving average comes in, right abouts. If we break significantly below the 20-period moving average, then we'll see both moving averages cross lower once again, and we'll be trading below both those moving averages also, which is that would be a pretty negative sign for the market overall. So it's just something to keep an eye on. And over here in the total world stock index, it's a very similar story. Price charts are very similar, as you can see. Now in the crypto world, right, we've been low basing for several weeks now, and we couldn't break lower, so the market popped higher, and this smells like a trap to me. All right, so I just mentioned just before I started putting this video together that the crypto market started to sell off once again, and I have a theory that a lot of people are probably chasing this move higher, and they're going to get stranded. So I'm by no means saying that we should be rushing out to buy some cryptocurrency, at least not yet. There's just no strong evidence that we've put in a broader bottom here in the crypto sector as a whole. So given what's going on with the moving averages and where price action is trading relative to them, I'm giving this market a big old goose egg. Gets a zero until we have a little bit more price information that gives us a higher confidence outlook in terms of what's going to be happening here. My personal bias, if I had to give one, is that over the next couple of days, we'll be looking at a -1 to -3 reading, depending on how viciously we sell off. If I'm wrong, then the market needs to make a break above this 50-period moving average and needs to do it quite soon. In terms of news events, so we have a potential statement coming from the Bank of Japan later today on their monetary policy. They're going to be talking about, no doubt, about how the BOJ, the Bank of Japan, has been intervening to come to the rescue of the yen, and perhaps we'll get some more details on the potential size of the intervention that the BOJ is considering. As far as North American news, tomorrow morning we've got GDP data coming out of Canada and the core PC price index coming out of the US. Moving on now to some currency analysis. Okay, so cryptocurrency. It's been a pretty rough day or rough close to the day, I should say. These values were accurate, and then just as I started recording, a lot of these currencies have started to take a bit of a dive. So that's what I mean. I don't think there's too much to write home about in terms of cryptos. We're going to take a look at a couple when we switch over to TradingView in a minute. But yeah, I'm not saying that there are any noteworthy opportunities that I can spot right now in cryptos that are high confidence and high probability. On the currency side of things, like I said, the dollar staged a reasonable recovery today, but so did the Canadian dollar and the Kiwi dollar. So we're seeing a little bit of a dislocation here between those two commodity currencies and its Australian peer. So the Aussie was down on the day. Biggest loser on the day was the euro. The pound was down a little bit, but the euro and the Swissy, broadly speaking, led the way lower. In terms of velocity, so we have the euro and the Swissy with negative readings here. So could be potential opportunities to short those two currencies. And although the dollar staged a recovery, in the last little bit of the session here, it did start to weaken a little bit, enough to affect its short-term velocity reading. Same with the Canadian dollar. The pound is broadly trading sideways, as is the Aussie on the shorter-term charts. And the Kiwi and the yen are showing slight signs of some positive velocity here. And then on the crypto side, it's fairly mixed. It's fairly a mixed bag. We're going to take a look at Ethereum and Bitcoin in just a moment in real time, just to see what they're doing since I've started this currency recap video. Stuff is flying around right now. Okay, so without any further ado, let's head on over to TradingView and see what's going on. Okay, so before I get into the fiat currencies, let's just take a quick look at Bitcoin. Yeah, look at that. These are 5-minute candles. So as I started recording, we've sold off quite sharply. So that will definitely affect the velocity scores. Same with Ethereum. Okay, so let's move on to what's interesting to me in the fiat currency space. So the Aussie ran back into this old broken support, which price action will often test broken support and see if it will work as newfound resistance. And so far, it's working well as resistance. I like the corrective shape of this bear market rally. My hunch is that there will be great opportunities to short the Australian dollar once again. Canadian dollar. So this chart pattern is known as the head and shoulders pattern, a very famous reversal pattern. So we've got the left shoulder here. We have the head here. And then we have the right shoulder over here. Now, if prices break below this blue trend line, which in trader language is called the neckline, then we could see a potential volatile move lower in the Canadian dollar. So how do you measure a target for a head and shoulders pattern? You do something that's called the neckline measurement, which is where you draw a vertical line from the top of the head to the neckline of the pattern, and you then superimpose that wherever the pattern actually breaks out, and that's your downside target. So we're looking at a 3% move in the Canadian dollar basket if we break below that trend line. So if we break below this trend line hard, then I'd be looking for opportunities to short the loonie. Now, in terms of the Swissy, we're heading into some potential support here. So it'll be interesting to see whether or not this area does in fact hold as support. It was resistance on the way up, which is why I'm looking at this area as potential support. The euro, I think, is the more bearish between the Swiss franc and the euro. So look at the euro. We've traded back into this resistance area, and look at this scary looking candle. That looks pretty vicious. If I'm looking at my momentum indicators, the relative strength index, slight bearish divergence, and then we just fell off a cliff here. So that's pretty bearish momentum. I would definitely be looking for opportunities to short the euro. And then the dollar, well, dollar is interesting. We have some very minor support right here from this pivot point, which the market is reacting to, but this isn't a major support level by any means. I would not be surprised if the dollar rallied a little bit higher and then turned around and fell off a cliff again. Well, fell off a cliff is a bit of an exaggeration, but a bit of hyperbole there. But I still do expect the dollar to trade a little bit lower, given how far we've traded to the upside. This correction over the last couple of days doesn't seem to cut it from a time-based perspective. So you can see here, just from a Fibonacci standpoint, the last time we had a significant correction, we corrected over 60% of the prior swing. Now, depending on where you want to measure from, we can measure from this swing here, which means we haven't done 38.2% yet, which is really the minimum I would expect. And if I move the swing measurement a little bit higher, we still have a little ways to go before we'd approximate the size of the previous correction that first kicked off in July and then ended in August. So either way, I do expect the dollar to weaken a little bit more before it puts in a bottom and trades higher for one more leg higher before I would expect a much more sizable setback. So that's what I've got on the currency side of things. Nothing that I would say is immediately actionable, but definitely some currencies that I think have the potential to get quite weak quite quickly. The Aussie dollar, euro, and potentially the Swiss franc, but really the Aussie dollar and the euro are kind of what I'm eyeing up here. So like I said, the dollar's at an important juncture. The market's still volatile. We're seeing 100 pip moves are nothing right now. So just be mindful of your position sizing and take that into account. Otherwise, that's it for me. There's no live class tomorrow. Next up on our calendar will be the Currency Room recording on Saturday. All right, traders, thank you very much. See you next week.